Are expert predictions really worth following?
Fantastic question. Today's episode dives into groundbreaking strategies that might just challenge conventional wisdom.
And you'll gain all this knowledge in under 10 minutes.
Exactly. With expert insights from Jason Shapiro and David Lin, we're preparing you for what's next.
Welcome to the Financial Insights in Minutes channel, where we distill today's top financial discussions.
Stay tuned as we uncover why contrarian strategies could be the best way to thrive, even in uncertainty.
And right after that, don't miss the incredible session with Jason Shapiro on why fading experts might just be your secret to success. Welcome back to the Crowded Market Report, where today we're diving into the intriguing results of Jason's Trade Fade series.
Indeed. This time, we're evaluating how expert stock predictions have fared against randomness and unconventional strategies.
What's the core message from these findings?
The key takeaway is that traditional stock picking by experts, like those from Barron's, may not guarantee superior returns, as evidenced by their lackluster performance this year.
That's a bold statement. What do the numbers reveal?
The Barron's portfolio gained only 5%, significantly underperforming the S&P 500, highlighting the risks of conventional stock selection.
Let's analyze the Barron's figures. Shouldn't experienced investors perform better?
You'd expect that, yet the returns illustrate a disturbing trend. Experts are falling short.
How did the random stock selections fare?
Interestingly, the ChatGPT-generated stocks returned a staggering 177%, outperforming even the expert picks.
What implications do these results have for everyday investors?
It's a clear signal that conventional approaches might not cut it, encouraging investors to rethink their strategies and even consider fading expert advice.
What's next for these expert portfolios?
Jason predicts continued underperformance, reinforcing the idea that contrarian strategies could yield better results.
Could we see a shift toward randomness in investing?
Absolutely. There's a growing trend of utilizing algorithms for stock selection that proves more effective than traditional methods.
So overall, what's the takeaway for viewers?
Consider fading conventional wisdom. It's about finding advantages where you least expect them.
Rethinking strategies is more crucial now than ever.
Exactly. Embrace creative investing and explore new avenues beyond traditional paradigms.
In this pre-market prep, we're diving into the Nasdaq's bullish momentum right before the much-anticipated earnings from the Magnificent Seven.
That's correct. This week could be pivotal. Investor sentiment is at an all-time high as anticipation builds.
So, what's driving today's discussion?
It revolves around the positive earnings expectations surrounding the Magnificent Seven. Investors are thrilled, and this could spur rapid growth.
There's definitely an exciting atmosphere. What indicators are hinting at this success?
The bullish market movement, along with tech stock rallies, are strong signals of forthcoming triumph.
Let's analyze investor sentiment. There seems to be a significant rise in optimism, right?
Exactly. With earnings reports on the horizon, investors are feeling increasingly confident and engaged.
What about the performance metrics? Are we seeing promising numbers come in?
For sure, many tech stocks are surpassing expectations, further building momentum.
Regarding the Magnificent Seven, what can we expect from their earnings?
It seems they're set to exceed predictions, affirming the current bullish trend.
How should traders position themselves now, given these earnings?
A proactive strategy is essential. Investors should contemplate options that capitalize on upcoming spikes.
What predictions does the team have for Nasdaq's performance following the earnings?
We're anticipating at least a 5% rise as tech recovers and earnings outpace expectations.
That's bold. What's fueling this level of confidence?
It's rooted in historical trends and robust market momentum leading into the reports.
What about the overall tech sector? Are they expected to maintain momentum?
Definitely, continued growth is on the horizon as firms innovate and adapt to changing markets.
To sum up, what should viewers keep in mind as we move forward?
Stay attuned to earnings indicators and be strategic. This is a crucial time for market engagement.
Great advice. This week promises to be both critical and thrilling.
Absolutely. Let's see how it unfolds as we approach the earnings period.
Today, we'll explore the impacts of the AI investment craze on South Korea's economy and beyond.
With recent sluggishness in GDP, could this spell the end of the AI bubble we've all been riding high on?
What's the core thesis, Steve?
The AI investment bubble has propped up many economies but is beginning to show cracks, particularly in South Korea.
Interesting. What signals point to this disruption?
Stagnant GDP and a slump in construction investments reveal an investment boom faltering.
Let's explore South Korea's current economic situation.
The indicators are concerning. GDP growth has essentially stalled.
How is the AI bubble impacting investor behavior?
Companies are facing increasing pressure to justify their AI investments or risk scrutiny.
What ramifications could this have on the broader global economy?
If South Korea falters, it might trigger ripple effects throughout Asia and beyond.
Are companies genuinely capitalizing on the AI investment?
Many are investing heavily without clear pathways to profitability, leading to a bubble.
How does AI investment fit into the broader economic picture?
The stresses from the AI boom underscore deeper issues. The actual growth of the real economy still lags.
Given all these signs, what might be on the horizon?
If trends continue, a recession could be looming.
Will companies face consequences if they fail to generate returns?
Absolutely. Investors are likely to demand clarity and justification for AI investments.
So in summary, what insights should viewers take away?
Caution is advised. Signs of the AI bubble waning may signal larger economic challenges ahead.
Joining us today is Joeri Schasfoort, an expert on global economies. Let's unravel why Europeans seem to be getting poorer.
It's great to be here, David. We've got a lot to discuss regarding productivity and the economic outlook for Europe.
What's the central argument about Europeans' economic status?
Despite overall stagnation, quality of life metrics remain high, emphasizing a complex narrative behind the apparent downturn.
What does the data show about economic growth among countries?
The United States is clearly outpacing established economies like Japan and many European nations.
How does productivity vary between Europe and the United States?
Europe's productivity growth has lagged behind the United States since the mid-1990s due to demographic shifts.
Are Europeans happier despite the economic struggles?
Yes, quality of life indicators remain stable, suggesting a different story than just economic wealth.
What about the impact of the euro on these economies?
While some Eastern European countries benefited, Southern Europe faced difficulties due to post-crisis austerity measures.
Looking ahead, what trends should we be aware of?
Aging populations pose risks for Europe, while economies in Asia and Africa may gain momentum.
What lies ahead for European economies?
Countries with strong youth demographics will likely outperform those with aging populations.
Can technology change the course for European productivity?
Absolutely. Advances in AI and green technologies could shift the narrative.
To wrap it up, what are the key takeaways for our viewers?
Caution is essential. Understanding the delicate balance between productivity and quality of life is crucial.
Maintaining societal well-being alongside growth will be vital in the coming years. Welcome to this live market analysis on FX evolution. Today we're unpacking a tumultuous mix of oil crashes, crypto rebounds, and critical upcoming earnings reports.
It's a wild ride out there, but with every crisis comes opportunities, right?
What's the overarching thesis from today's analysis?
The experts suggest that crashing oil prices reflect underlying economic stresses that could ripple through other markets, including stocks.
Interesting. And how's the crypto market responding to all this?
Cryptocurrencies are surprisingly rebounding, indicating resilience among investors seeking alternatives in turbulent times.
Let's dive into today's news. Oil prices dropped dramatically. What's behind this?
It's a classic supply-demand issue exacerbated by geopolitical tensions. This drop also has inflation implications.
Shifting gears to crypto, what's driving its current upswing?
Investors are flocking to crypto as a hedge against traditional market volatility, showing a clear preference for decentralized assets.
Earnings reports are coming up. How will that affect the overall market?
Market volatility could ensue depending on outcomes. Disappointing reports might amplify existing fears.
Given the current climate, how do you predict stocks will perform post-earnings?
Expect fluctuations. Poor earnings could lead to sharp declines as panic selling often occurs.
What's the outlook for oil prices?
Analysts predict stabilization, though it highly depends on geopolitical developments and global demand dynamics.
To wrap this up, what's the major takeaway for investors?
Stay informed and agile. The volatility creates risks but also presents numerous opportunities, particularly in crypto.
Navigating these waters will require keen attention to market signals.
Exactly. It's a delicate balancing act between risk management and seizing potential gains.
In this video, we explore the market trends and forecasts as shared by David Hay and Jeff Dix from Evergreen Capital.
They provide a deep dive into the potential for a rocky future based on current economic indicators.
What's the central thesis presented by these experts?
They emphasize that following strong market years, notable downward trends often occur, averaging 21.4% over the past 2 decades.
That's quite a substantial claim. What are the contributing factors to this outlook?
Historical patterns, rising interest rates, and geopolitical tensions all play significant roles.
Let's discuss expectations for market volatility.
Based on previous trends, we might brace for a tumultuous year following the current highs.
How do current bond yields contrast with stock returns?
Bonds, especially in the current market, offer more favorable yields with significantly less risk.
What's the outlook for emerging markets?
Emerging markets are gaining traction due to better yields and lower government debt levels.
What's the investment outlook in the energy sector?
Midstream energy stocks deliver competitive yields in a volatile economic environment.
How are credit spreads behaving in this landscape?
Currently, they reflect relative investor confidence, though caution is still advised.
What predictions lie ahead for the upcoming market year?
Signs suggest we may face a bear market, particularly after a strong year.
Which asset classes should investors consider during potential downturns?
Gold frequently performs well during economic uncertainty, making it a worthwhile consideration.
To conclude, what should viewers take from this discussion?
Prepare for shifts. Focus on risk management and income strategies.
It's crucial to navigate wisely as we look ahead.
Exactly. A balanced yet dynamic approach will be essential.
We've unpacked some hefty predictions from our guests today, revealing the shifting landscape of investment methodologies.
That's right. David Hay and Jeff Dix brought to light the volatility that could rock the markets, especially with their focus on bonds and REITs.
And Joeri Schasfoort highlighted the challenges in European economies, which might affect productivity despite regions boasting high living standards.
Indeed. Plus, Steve Van Meter's insights on the AI investment boom indicated a more extensive problem brewing beneath the surface.
Meanwhile, Jason Shapiro stirred the pot by showing how faders of expert advice might just strike gold in today's markets.
And let's not overlook the FX Evolution panel, who discussed the oil market's downturn, while also giving a nod to the resilience seen in cryptos.
Lastly, the Trade Brigade shared a positive outlook about the Nasdaq, indicating that there's always a silver lining.
So if you found this information illuminating, don't forget to like and subscribe to our channel for more insightful discussions.
Absolutely. The financial world is unpredictable, but this channel aims to keep you equipped with the sharpest insights.
Thanks for joining us today. Make sure to explore our other videos for even more valuable content.